Good morning, traders, and welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. We get our opportunities for day trades based on where we think the market is in the competition between buyers and sellers. That's what it's all about. If you have more buyers, the market goes up a tick. If you have more sellers, the market goes down a tick. If you can predict whether you will have more buyers or sellers, you can predict where the market will move next. And that is what the auction process is all about. Trying to figure out, where are we? How do we get here? Is the current inventory net long or net short? And then what's likely to happen next based on that? So this morning, we are opening with a massive gap up. We're talking right now, we're roughly 40 points, 42 points above the high from Friday. That is a very large gap. Any gap that's larger than 20 points is what we would consider a large gap. Okay, if it's less than 20 points, there's a pretty good chance that that gap is going to fill. If it's more than 20 points, the odds actually favor a gap and go, meaning the market doesn't fill the gap. Not today. So this large gap, I mean, obviously we still have 30 minutes till the market opens, but assuming it's something like this, 40 points, makes it less likely that we're going to fill the gap. Now let's just walk through what I mean by fill the gap. Let me just get my drawing tool up and running here. Righty then. So to me, a gap fill would be the market getting back into Friday's range. Okay, so that would be the market making its way all the way back to 68.41. So as I said, that could absolutely happen today because we have a gap, but the fact that the gap is this large means that is less likely to happen. The more likely thing is either the market goes sideways at, upper prices without filling that gap, or the market continues higher today, making new highs. Okay, one of those two is the more likely thing to happen based purely on the size of the gap. Now, bigger picture, this to me is not bullish. Why do I say that? Because the market is getting itself overly long, overly fast. Let's just zoom out real quick and we will take a look at, let me just adjust this. Okay. We'll zoom out a little bit. We'll take a look at the daily and I'll try to make sense of it by looking at that for context. So this range that we've been stuck in since the middle of September is what we call a balance area. Okay, it's just an area where the market is going sideways, trying to decide what it wants to do next. Does it want to go higher? Does it want to go lower? It just plays tug of war inside that range as long as it needs to before it's ready to break out. Now, last week, we broke out of that range. Okay, we made those new all-time highs. That was the beginning of the breakout. Now, what is the most common thing to happen when the market breaks out of a range like this? Well, the most common thing is you get a little bit of excess, you get a little bit of short covering, then the market comes back down to test that breakout, which would be somewhere around those all-time highs, those previous all-time highs. Well, we haven't done that. We have not come back down to retest that breakout. You add on top of that, you can't see it in this candle because this is a 24-hour candle, but there was a gap that we left behind on Friday, and then there is another gap that we're creating this morning, okay? Multiple gaps like that increase the odds that the market needs to come back for at least the first gap. Now, I know you're already confused. You're like, Charles, you just told us gaps this large often don't fill on the first day. Now you're telling us we need to come back and fill this gap. So you're going to have to be able to hold multiple pieces of information in your head at the same time. Intraday today, so between the market open and the market closed today, the most important information is the fact that it's a large gap. Okay? That's the most important information, is that we've got a large gap and large gaps often don't fill the first day. But what you want to keep in your mind for a longer time frame understanding of the market is that we absolutely will need to come back and fill this gap eventually. It doesn't have to be today. It could be tomorrow. It could be a week from now. But we will absolutely come back and fill this gap at some point because we have multiple gaps stacked on top of each other. That is on a swing basis. That is the market getting itself overly long, overly fast, and it will need to backpedal. It will need to give stronger hand traders a chance to get in. They don't FOMO. They don't chase. The stronger hand traders that I'm talking about are not going to wake up this morning, see this large gap and be like, oh my God, I have to start buying stocks. They're not going to do that. Okay. They're going to put their limit orders to go long inside Friday's range. And so they're going to be waiting for the market to come back down and fill the gap before they get long. But that doesn't mean we won't have FOMO buyers today. It just means they won't be those longer term, stronger hands types of traders that really move the market. Okay. But we absolutely can have FOMO today, trying to continue this market higher. So how do we look at that? How do we think about that? Well, the best thing that we can use is this overnight range. So if you're looking at the chart over here on the left side of the screen, this is called a market profile chart. So it is basically a combination of TPOs, which is the letters, with volume profile, which is the little colored bars that you see over here. Okay. So what you're looking at down here, this is Friday's regular trading hours range, and this is the range over the weekend. Okay. We're not going to include this little bit down here. We'll just pretend that's not there. Okay. Now, why did the market make this sudden move? Well, because of, the positive news about trade talks with China. Okay. So what we want to ask ourselves is, after that move happened, what did the market do? Where did the buyers step in? Where did the sellers step in? Who was in control and what happened next? Well, if we look at the high, which is currently the all-time high, okay? From there was resistance, 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 okay? So as the market tried to poke up, there was less and less buyers. There was more and more sellers. And we can also see that by looking at the volume profile in that area. Right? Do you see how there's less and less volume the higher we go? We had 5,000 contracts, then 4,000, then 2,000, then just 150. Okay, so the tapering off of the volume right there and the tapering off of the time is a sign that people really aren't comfortable going long above 68.85, at least over the weekend. They weren't comfortable doing that. So that area is acting as resistance for the market right now. Well, if we look at the lower end of the overnight range, what do we see down there? Very similar thing, right? The tapering off of volume and the tapering off of time. In particular, there's a node that really jumps out at us right there at 68.69. Okay. There's a really strong taper right there. So that shows us that if people want to FOMO, if they want to chase, if they're desperate to get long, that's where they're doing it. They're doing it right there. Okay. So this morning, what we should essentially assume is this overnight range is like a chop zone. Now, if for the people that follow my stream, what I talk about on a regular basis. This is not a chop zone in the traditional sense. This is a gap. Gaps are different than chop zones, but for the context of understanding it today, we will use the chop zone as the example. Okay. So the market is going to open, and then everybody's going to have to make a decision about what they want to do. If they're in a long trade, they're going to have to decide, do I want to take profits on that long trade? Or do I want to stay in it? Do I think the market is going to keep going? If they're in a short trade, they're going to have to decide, do I want to cover my shorts or do I want to stay short? Do I think the market's going to come back and fill the gap? If they're flat, if they're neutral coming into the morning, they're going to have to decide, do I want to go long today? Do I think the market is going to keep going up or do I want to go short today? And when we start to think about those different market participants, when we start to think about how they are currently positioned and what they might do, understanding where we are within this yellow box helps us to understand who is doing what. So for example, if a person is long the market and they're thinking, I don't want to be long anymore because I don't think this thing is going to keep going any higher, where are they probably going to start taking profits on their long? Right up in there. right? Near that high where things tapered off. That's where they're going to start taking profits on their longs. If somebody wanted to get short this morning, where are they probably going to get short? In the resistance, in that same area, right? So if somebody's long and they want to get flat, they're probably going to do it up there. If somebody's flat and they want to get short, they're probably going to do it up there. So what will we be looking for when we get up there to that area? We're going to be looking for resistance. We're going to be looking for the market to run out of steam. And if it does run out of steam and it starts to come back down, what is the market telling us? It's telling us we've run out of buyers and the sellers are taking control of the market. So where is the market going to go from there? Well, how about that lower end of the range, right? Why? Because imagine that you are short the market from up there. Where are you going to take profits? In that area of support, right? So those shorts that enter up there, that's where they're going to lock in profits. Okay. Now, what if you're short the market going into the day and it just pumps straight up to that overnight high? What are you going to do up there? You're going to get stopped out. You're going to get squeezed. So we should expect some short covering up there. What if you're long the market this morning and it comes straight down and you haven't taken profits yet? What do you probably have down here? A stop. So there's probably going to be a little bit of a liquidation down there. So if we get to either end of the range, we should expect either a little bit of short covering. So we get to the upper end of that overnight range, boop, 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 a little bit of short covering up there. Or if we get to the lower end of the range, boop, 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 a little bit of liquidation down there, right? That's a very quick move happening. But that doesn't necessarily mean the market is going to keep going. Let's say we get up to the high, we squeeze all those shorts, the market comes back down and it finds support there. New buyers start stepping in. What's the market going to do? It's going to keep going higher. Or if we get a liquidation at the low and we come back up and we get resistance, well, then the market is going to keep going lower. So what that tells us is we can pretty much just look at the overnight range and we can say, this is how we'll do business. If we get to the overnight high and we get new buying, we go long for continuation to the upside. If we get to the, all-time high and we come back in and we fail, we're going to go short and we're going to target a move to the lower end of the range. If we get to the low and we get new selling, we'll be short to fill the gap. If we get to the low and we fail and we reverse back up, we'll be long, targeting the opposite end of the range. So we can say to ourselves, we only do business if we get to the upper or lower end of this overnight range. If we get, around 68.90 or 68.70, that's where we're going to do business. And we're going to do whatever we're going to do based on what happens when we get there. Okay? So what do I think is the most likely thing the market is going to do today? I think it's going to fail on both ends of this overnight range. I think we're probably going to push to the upper end. We're going to get some short covering. Can I tell you how far that's going to be? No, I cannot. Maybe it'll be 10 points. Maybe it'll be 50 points. I don't know. But I know the behavior of short covering and FOMO buying. And so if we start to get that up there, I'll be with it as long as it lasts, but I'll be assuming it's coming to an end very quick. So what am I going to be doing if I'm a long trader up there? I'm going to be moving my stop above my entry as soon as I can, and I'm going to be locking in profits as soon as I can. I'm not going to fall in love with a long trade today, okay? Because I know this thing is probably just going to be short covering and FOMO buying up there. The strong hands are not going to buy up there today. The strong hands are waiting for the dip. I prefer to do business with the strong hands. So if I am going long up there, it's for a quick trade. It's a scalp, not a sit in this trade all day type of trade. Okay. Same thing at the low, right? If I know that large gaps like this often don't fill on the first day, I can get short and target a gap fill. Absolutely. Because gaps do fill a lot of the time and this one needs to fill. But I want to be trailing my stop as the market is working its way lower. Because if we start to fill the gap today and we don't, let's just say anywhere between 68.66 and 68.41, anywhere between there, the market finds support and it turns around and comes back up. Guess what's going to happen? We're going to squeeze every single person who's gone short that day. Okay. So at whatever point that happens, every single seller this morning who will all be shorting for the gap fill, they will all get squeezed at once. So if I'm going long above the high or short below the low, I don't want to fall in love with those trades. I want to be moving my stops. I want to be locking in profits as quickly as I can. Okay. Now, let's say the market were to come all the way back down and get to the gap fill. It were to get to 68.41. Then we look to see what happens there. If that brings in buyers, great. We're bullish for continuation back up. If not, we're looking to pull back further into Friday's range. Okay. I think the number one most likely thing today is that we go up, fail, come back down, fail, and then basically go sideways around this overnight range. I think the second most likely thing that happens today is a gap fill. The market comes down and fills the gap. And I think the least likely thing to happen today is that the market continues higher and then closes at a much higher price. Is that possible? Absolutely. Okay. But I'm just saying the market needs a dip. I'm just putting it to you that way. Intraday today, the market needs a pullback to give stronger hands a chance to get in. So if the first move is up, it's going to come back down eventually. Okay. So just be cautious of that. Now, if it goes down first and then it turns around and goes up, then it can stay up at higher prices because you've given stronger hands a chance. You've squeezed the shorts and all of that. But right now, I think we're probably going to have a sideways day where we get above the overnight high, however far we do, and then we come back down, and we get below the overnight low, however far we do, and then we come back up. That is my prediction for what today will be. Any questions on any of that from the chat? If you are watching this in the Discord, you can leave your comments in the Futures-Charles tab on the Discord. I can see Trader is there. Good morning to you. Welcome. John also in the house. Good to see you. Rich is here. Bill. Trevor. Both of us knowing. He says, hey, can we take a look at Bitcoin as well? Sure. We got some time. Let's look at the Bitcoin. Man. I don't like it. I don't like making predictions at moments like this. This is a really tricky point. So, yeah, I think if I was going to day trade Bitcoin, I'd be probably more likely to short this than go long. Just look at previous support and resistance levels. Okay. So look at these levels here that were support. Okay. The market has this big sell-off. They become resistance. They become resistance. They're finally able to break through, new all-time high. Come back down again. They become resistance. Look where we are right now. Same place, right? So you've got a lot of resistance in here. Now, if Bitcoin can get through it, great. You're heading back up to those all-time highs again. But right now, I would say it's too early to make that prediction. As a longer-term trader on Bitcoin, I do not like the fact that we've had to retest this support this many times. Okay? Yes, it is technically holding right now. And yes, that is bullish. But the more pokes, the more likely it is to break. And we've now poked it 1, 2, 3, 4, 5 times. Okay? So the 6th time will probably be the one. And I know I said that on the 5th. I know I said right here, this would probably be the one that would sell off. But man, each time that you poke at that, it is more and more likely to break. So if we poke at, 108 again, it's probably going to crash. And as I've said, I really like the idea of 101,000. I think to me, that is the area where it is a gift as a longer term trader to be able to buy some Bitcoin for 100,000. Could it go lower? Yes, it could, but I don't think it will. I think you'll find support in here. right around 100,000, and then you'll get your bigger move to, 140 or whatever. So yeah, if I was a day trader, I think the better trade is actually shorting it here, because you can use a tight stop. You can use like 117 as a stop. And I think as a longer term investor, if you get a dip to 100 or probably 101, that's really a gift. And one might see that as a buying opportunity. But man, it's just imbalance. Let's take a look at gold as well. Okay. Yeah. So gold, finally cooling off a little bit last week after this insane move to the upside. I would say that gold probably needs to dip down towards 39.70. So it was a very small balance area. It was only like 3 days, but this was a balance area. You re-entered it and bounced. That should have gotten you continuation higher. The fact that it didn't means you probably need to head to the lower end of that balance area. So I would say the gold is likely heading for, 39.66 area. Pete the Cat in the house. Good morning to you. Will is here. Tylerp is here. He says, do you go over your detailed analysis and setups in your 2 weeks course? Yes, I do. So I teach a workshop a couple of times a year. I don't have one scheduled right now. It'll be early next year, probably like February or March, something like that. I don't have a plan yet for when I'm going to do the next one. But yes, I teach everything in that course. There's a reason why I call it Mastery of Markets in Mind. I teach you every single thing about how I read the market. I teach you every single thing about the auction process and the software and my trade setups and everything. Risk management, trading rules, all of it. Everything is in that course. It is all encompassing. But as I said, I don't have one scheduled right now. If you're interested in learning more about how I do things right now, the best thing you can do is just join the brigade. There's a link at the top of the video here, piratetraders.io/join. Just head there. It's only $20 a month, and just join the live streams and watch me talk about the market like this, every day, over and over and over again. Ask me lots of questions in the chat, and you'll learn, just as much from that. You won't learn my trade setups, but you really don't need my trade setups. The only reason I teach my trade setups in the workshop is because people keep asking me to. They keep telling me, if you'll just teach us your setups, then we'll be able to make money. And I keep telling them, it's not going to help you because my trade setups are custom tailored to me. They're designed for my way of reading the market. They're designed for my skill level. They're designed for my personality. They're designed for me. They work great for me. But they only work for about 10% of the people that trade them, because only about 10% of the people are the same as me. Most people are a little different. And so what I really teach, which is the more important thing, even though nobody wants it, I teach you how to think for yourself, how to actually find your own setups, how to create a system that is custom tailored to you. But nobody wants to do that because that's hard. Everybody wants me to just tell them how I trade and they just do what I do. But I'm telling you, it won't work for you because you're not me. You will not be able to trade the way I trade. The way that I trade requires an incredible amount of discipline. That discipline requires confidence. That confidence comes from experience. It comes from me doing it myself over and over and over and over again, taking all the wins and all the losses and knowing my statistical probabilities and being able to think in probabilities, which is counterintuitive to human beings. We don't naturally think in probabilities. We think in exactness. So Charles tells me I should take a look above and fail trade of the overnight high today. He tells me that we're going to get short covering up there, and that whenever that short covering runs out, the best trade is actually a short. So the market gets up there and it starts to find support, and bop, 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 it gets a little short covering. So I just FOMO into my short immediately. But then what happens? We get some FOMO buying, and that leads to more short covering, and we get some more FOMO buying, and that leads to short covering. And now I'm in a massive loss, and I'm like, fuck you, Charles, your system doesn't work. Meanwhile, Charles is saying, why are you in the short? You're supposed to wait until all of that runs out and then get short as we re-enter the overnight range. Oh, but Charles, I would have had to do nothing for the first hour and a half of the day. I would have had to watch the market move 30 points higher and just sit on my hands. I can't do that. Well, then my system isn't right for you, because my system requires extreme discipline. I cannot let the market get me emotional. I cannot let the market force me to make decisions. If the market sweeps me out of a trade, I have to get back in. If I see support at the overnight high and I want to go long because I think, the market's going to continue higher, and then I get long and I put my stop in the range, and then it comes back down and whoosh, it sweeps through, it takes out my stop, but then it pops back up there and it's getting support again, I got to re-enter the trade. Are you going to have the confidence to do that? Are you going to be able to manage your risk and get stopped out and immediately get back in the same trade because it was just a sweep of the order books? Will you even recognize what a sweep looks like? Will you know the difference between a sweep and a change in market sentiment that's going to take us much lower? Will you recognize new selling versus just the market sweeping the order books? Because that takes skill. It takes years and years and years of watching the market and mastering an understanding of how the market moves. So if you want my trade setups, I'll give them to you. But if you want my advice, the best thing you should do is just get very, very good at one trade setup. That's it. And you can just Google, give me a trade setup. It doesn't matter what it is. Pick any one trade setup and just trade that one setup and that one setup alone. So I just talked about the look above and fail of the overnight high, right? So what that basically means is in the regular trading hours, the market gets to the overnight high. There's one of two things that's going to happen every time when we get there. We're either going to keep going or we're going to fail and come back down. Every single time. Now, we may get there. We may spend hours grinding there before we make the move, and that sucks. We may get there and start to move up and then sweep the order books and then go up, and that sucks. Or vice versa, start going down, sweep the order books, and then go down, and that sucks. But I guarantee you, every day when the market gets to the overnight high and the overnight low, it either keeps going, in which case you can make money going long, or it fails, in which case you can make money going short. So just do that. Just every day, focus on that one thing. And what you'll start to notice is you'll start to learn a nuanced understanding. It's not that you just always go short when the market gets to the overnight high. It's not that you always go short when the market gets to the overnight high and then starts to come back in. You'll start to notice changes in tempo. And how can you read those changes in tempo? What do they mean? Should you trust this level or not? You'll start recognizing changes in volume, the tapering off of volume, and where that matters and why, right? You'll start noticing when sometimes you miss the move. Maybe it gets up there and it finds support, but it does it so quick, you don't get a chance to enter a trade. And then you got to learn to be patient and just let it run without you, right? You got to give up on the trade because you missed the good entry. So these sorts of nuances, these are in your brain, right? It's a skill. It takes practice. Practice is the way you get good. So if you're looking for a trading system, just pick one thing and practice it every single day. Study it, obsess over it, become the best trader on planet Earth for trading at the overnight high. And then once you get good at it and you start making money consistently trading that trade, then you start working on the next one, right? Then you start to say, well, what if we get that support at the overnight high and then we start one time framing? Can I take trend trades later on in the day because the market is one time framing? Or after you get cessation, you start to say, can I take reversion to the mean trades because we're no longer one time framing? You start to say, can I take a gap fill trade because the market created a gap? Or should I take a gap and go trade because we're bringing in new buyers and we're continuing the momentum? You can't learn it all at once. Your brain can't do that. So start with just one thing and become the best in the world at it. Obsess over it and then build from there. And, I just recommend you join the brigade and hang out with me, and we'll talk about these things every day over and over again, and you'll start to see the market as I see it, which is as an auction process, right? And an auction process is messy because you can change people's minds in an instant, and you got to learn to understand that. It's the nuances that pay the most money, not having some exact system for entering trades. but being able to know when not to trade and when to step on the gas. Okay, so the market is open. As of now, we've got the gap up, and it is a gap and go, so that is bullish to get to the overnight high. Okay, so we are now bullish to get to 68.90. If the market comes back through the opening price, it's no longer a gap and go, then we're looking for a pullback. Okay, probably down towards 68.70. So if they can stay above the opening price, the target is 68.90. If they come through the opening price, the target is a pullback towards the 70s. Let's see what happens. Once we get to the overnight high, that's when the next auction starts, and we see what comes next. And so you say to me, well, Charles, should we be long right now? It's a gap and go. We're above the opening price. We think we're heading to the overnight high. Well, no, you shouldn't be long. Why? Probabilities, right? Probabilities are 50-50 right now that we could go up or down if we cross through the opening price, obviously. So taking that trade doesn't have great probabilities. But if you wait for it to get to the overnight high, and then you decide to go long with new buying or short with a lack of new buying, then the probabilities are very good. So here we go. We've passed through the opening price. Now we're looking for a pullback. Should we be short at this moment? Not necessarily. You technically can get short right now as a gap fill trade. But we talked about the fact that a gap this large often doesn't fill the first day. So we suspect we're going to spend some time going sideways in here. Do we really have to be in a trade 1 minute in the day? Or can we just wait and get into a higher probability trade at the upper or lower end of the range? I don't know. Can you guys sit through the market going sideways for 2 hours and not take a trade because you haven't gotten the high probability opportunity? Does that work for you? Let's find out. Okay, so now we're also going to be watching Bookmap. So now that the market is open, Bookmap is going to give us lots of insights. The ultimate question that we're asking ourselves is, do we bring in new buyers, right? Does this market start to build momentum up? Because while that will probably mostly be short covering and FOMO buying, that'll keep the market going up, right? So we're going to be looking for large, nodes of liquidity within the order book. And we're going to see what happens when those change. Okay. So right now there's a lot more liquidity above price than below. That doesn't necessarily mean the market is going to go up, but it means right now that's acting as a magnet to pull on price. Okay. So what happens if that suddenly disappears? Okay. Why do I say it's acting as a magnet? Let me switch colors here. Look at this low we just created down here. So we dipped down and we started coming back up. What happened at exactly that moment? They started adding liquidity above. Okay? So as they add liquidity, it will reverse market one way or another. So we want to constantly be keeping track of where is the big nodes of liquidity. Because as they change, the market will reverse and start going the other way. The next thing we want to look at is the stops and iceberg setting, which it doesn't look like we have too much stops or icebergs here yet. But we want to watch those stops and icebergs because those tell us about changes in the auction. And then lastly, we want to watch the volume dots right here. Okay? Those volume dots are going to show us who the participants are at the different locations. So if you've got green at the low, that's buyers stepping in. That's new buyers. But if you've got green at the high, that's shorts getting squeezed. Okay, so we want to keep track of those as well. And then lastly, right here, this is what we call the volume pressure imbalance market pulse. So as this gets to an extreme, as it gets above 95%, you're going to hear a little clicking noise. Click, 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 click. That is a sign of a sweep of the order books. You're only going to get 95% of the business, long or short, at a particular moment if you are sweeping the order books and taking out stops. So a lot of times it's actually counterintuitive. When you get a red click, that's when the market just made its low and it's ready to turn around and head back up. Or if you get a green click, that's when the market's made its high and it's ready to turn around and head back down. More importantly than that, though, is what happens after you get that clicking noise. Because if the market goes up and you get the clicking on the green side, yes, you assume the market's going to turn around and come down. But what if it doesn't? What if you sweep the order books to the upside and then you keep bringing in new buyers? Well, that's very bullish, okay? And vice versa on the low. So these are all the things I'm going to be watching and commenting on as they happen. And then you'll see how this gives us a bit of an edge, recognizing what's going to happen next. Good morning to James. He says, Window Trader Blue works with MBO data level 3. So Window Trader, unfortunately, requires that you buy like specific data. They've got 3 different companies that's basically the only 3 that they can connect through. So yeah, you won't be able to use old data unless it's with one of those companies. So it's like IQ Feed is one. I forget what the other 2 are, but you can look it up on their website. So it'll work with level 3, but it would have to be through one of those companies. Marge says, 1, so are there real stop hunters and who are they? And 2, the market makers and banks, ? Or is it just auction theory? 2, can market makers and everyone see where you have your stops? Okay. So this is a newbie question, and I'm glad you asked it because it gives me a chance to clarify this for people. So first and foremost, nobody cares about your stop. Okay. You personally, nobody cares. That's not how it works. Yes. Depending on where you trade, there are market makers that can see your stops. Okay. If you trade, for example, through, Robinhood, then for a fact your order flow is being sold because that's just what they do. But it doesn't really matter because your stop is in exactly the same place as everybody else's. So the market doesn't have to see where I know where the stops are. I can tell you right now with no level 3 data or any secret anything, I can tell you where the stops are. There is a fuck ton of stops at 89, 90, and 91 right now. There's a ton of them there. And just watch what happens if the market gets there. What you'll see is the market will get there and then out of nowhere, it'll just be like, bop, 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 bop. It'll just pop up really quick. If you're looking at, Bookmap, you'll be able to see the stops settings will show you those stops. It'll show you where the people got stopped out. Okay. So the fact that the market is coming for your stops has nothing to do with you personally. It's just everyone in the market is looking at the same information. Everybody sees the same candlesticks with the same highs and lows, and they all put their stops in the same place because that's just what people do. It's just human nature. And so what the auction theory is, what auction process is recognizing what is that human nature, and then what will the market do? Because the best way to think about the market is you can't think about it like there's some, secret person in charge that's controlling. It's some big bank somewhere, some group of big banks, and they're just trying to screw everybody over. That's not how it works. There are millions of market participants every day entering trades in the market, and they all have their own system, and they're all trying to trade their own way for their own reasons, and everyone's just trying to make money. And so what that does is it causes the market to go all over the place. It goes way up, it comes way down, it stops and grinds in a tight range, it moves really fast. It does all these weird random behaviors because there's so many different people, including banks, including hedge funds, including Joe Schmo in his basement. Everyone is just trying to make money, and they're all competing with each other, right? They're all trying to outsmart each other. There is no one thing that rules the market other than maybe liquidity coming out of the Fed. I mean, that definitely is a major mover of markets, but that's more of a swing trading longer term thing. As far as intraday moves are concerned, it's all random. And the sooner you can become okay with that, you can accept that it's totally random, which means the outcomes will be totally random. If you're going to choose to go long, at 68.74 right now, because you think that's going to hold this support and you're targeting a move back through the opening price because you think that that's the highest probability where we're going to come back to, there's good odds that trade will work for you. Okay. That's a good trade in terms of the likelihood that it'll work. But the fact of the matter is that today, at this moment, as you enter that trade, regardless of where you put your stop or your take profit, the odds are completely unknown. In reality, it's random. It could work or not. And you really will never know. And if you can accept that, it makes trading a lot easier because you can still make money in a totally random environment. You know what I mean? It's like, think about like a football game or a basketball game or something like that, right? That is another totally random environment. When the quarterback gets that football hiked into his hands, yes, he knows what play he's going to run. He knows where all of his, fellow teammates are going to go and what they're going to do. Yes, he has studied his competition. He knows the other defense. He knows what they like to do and what they're likely to do. But in that moment that football is in his hands, anything can happen. Maybe right as he looks over for that receiver that he plans to throw the football to, maybe suddenly the sun shines in his eyes and he can't see. Or maybe the linebacker normally kind of pushes back a little bit to protect, but instead on this particular play, for whatever reason, the linebacker decided he wanted to try to tackle the quarterback. He wanted to try to sack. And so then the quarterback leans back to take that throw, and all of a sudden there's a player tackling him, right? The outcome is always random. Anything can happen. So a quarterback, when he says hike, can't feel like he knows for sure he's going to be able to throw the ball and get it to that receiver. That's not the game of football. The game of football is he gets the ball in his hand, he's got his plan, and he just hopes that plan is going to work, right? He just hopes that receiver is going to be open. He just hopes he's going to be able to get the ball to them before somebody tackles him. But the environment is random. That's what makes sports fun, that it's totally random, that anything could happen at any moment. The same thing is true with trading. It is totally random. Okay. So then you say, well, who are the people that who are taking out your stops? Well, generally speaking, they are what are called high frequency traders. So there's a whole industry, a whole cottage industry of firms that this is all they do. They program algorithms to basically sweep the order books. So for example, as we talked about, there's a lot of stops right in here. Nobody needs to see them. As a matter of fact, you can't see them because the market doesn't see your stop until it's entered, which only happens when you get there. That's what a stop is. Your broker is holding on to the stop. So unless somebody is paying your broker to tell them where your stops are, which, like I said, some firms do that, but unless somebody's paying for that, they don't know where your stop is until the market gets there, and then your broker puts the stop into the order book. Okay? But I know their stops up there because I know auction theory. So even though we can't see them, they're there. Okay. So when the market pushes up there, and let's say it's at 88, right? 68, 88. This high frequency bot will know that if it goes long, right then and there, with a large order size, that it will be able to push the market up a few points. Okay? Because it's monitoring the amount of money at the bid and the ask every second of every day. And so it knows, if you look at the bid and the ask right now, there's like 40 on the bid, 40 on the ask, right? So it's taking about 50 contracts to push the market around right now. So that high frequency bot knows when we get up there, it just needs to go long about 50 contracts and it can push the market up a tick, right? It also knows there's stops up there. So it knows it'll be able to take profits. So what does it do? It goes long, the market flies through those stops. It takes profit into those stops, right? And then it's done. It's gone. And it happens generally in like less than a minute. It's very, very quick. The market comes in, it sweeps the order books, it makes money, and then it's done. That high frequency bot turns off and looks for the next thing to do. Okay? And so it's infuriating when you're a day trader and you're like, I want to get short right here and I want to have a nice tight stop and I'm a genius. And then the market comes up and takes out your stop and then it goes where you think it's going to go. And you're like, God damn it, they're hunting for my stops. No, they're not. They're not hunting for your stops. They're hunting for all the stops. They're hunting for where everybody puts their stops. So there's two ways that you can fix that. If you find you get stopped out a lot like that, where the market sweeps the order books and then it goes where you think it's going to go. Okay. The first way is the Rocky Balboa strategy, right? How did Rocky Balboa win his fights? He just let his opponent beat the shit out of him so long that they would become exhausted and then he'd come back at the end and he'd get them. And it was his ability to take those punches over and over again. So one way that you can handle a sweep of the order books is, you get short, you got your stop, the market comes up, it sweeps you out, then it starts coming back down again. What do? Just enter the short again. And if it sweeps you out again, just enter the short again. And if it sweeps you out again, just enter the short again. And then eventually when the trade works, you make your money. And as long as you make more the time the trade works than you lost the times you got stopped out, well, then you're going to be a profitable trader. Does that suck? Yes, it's not fun to lose, then win. As long as the win pays for the losses, though, that's profitable trading. That is successful trading. Now, you want to make sure you don't get whipsawed. You want to make sure they don't stop you out and then go without you. So for that system to work, you got to stay in the game. You got to take the punch and stay in the fight. You can't give up because then you just get whipsawed out of your trade and you just lose money and you never get a chance to make it back. The other way that you can handle it is you can be the sniper. So you could say, instead of getting short here with a stop up here, what are you going to do? You're going to let them come up and sweep the order books first, then you're going to go short. And maybe you're getting short at exactly the same location, but you're just having the patience to sit and wait for that moment when that perfect shot comes. Because they're probably going to sweep the order books. They do it every day. The high frequency bots are turned on every single day. And so that's what they're going to do. And you just have to decide based on your personality, which of those strategies is better. Are you better at sitting and waiting for that perfect entry, waiting until they've swept everything up and then you're going to enter the trade? Or are you better at just entering and just trusting your instincts, trusting the market generated information? This market is going to go lower. This is just a sweep of the order book. And when you can trust it, then you have an edge, right? So that's when I say that you have to develop a system that's right for you, this is what I'm talking about. And then you say to me, well, Charles, I hear you. What if I just don't put my stops in those locations? What if instead I say, I'm going to get short here and I'm going to put my stop like all the way up here. I'm just going to use a giant, huge stop. That doesn't work for trading. There's a reason why everyone's stops are in one place. Because if you try to trade with this massive, huge stop, you're probably going to end up losing money over the long run. Even if you have a higher win rate, even if you win 80% of the time, you'll still be an unprofitable trader. Because if you're taking profits here and you're getting stopped out up here, then you're potentially losing more than you would win. And that doesn't work over a series of trades. It might work today. It might work great. Today, the market might push up there. You get in your trade. It does a bit of short covering. It comes back down. It gets to your take profit. And you're like, yay, I made money today. I'm a genius. But if you did that tomorrow and the next day and the next day and the next day, you wouldn't. because eventually you're going to lose. And when you lose, you're going to lose more than you won when you won. And so you're not going to be a profitable trader. So you have to have tight stops. You have to have areas where you're risking a very small amount to win a very large amount. That just means you have to deal with the sweeping of the order books. You have to have a way to handle that particular behavior. But recognize it's always going to happen. And it's not your stop that they're coming for. It's everyone's stops. So instead of worrying about it, worry about recognizing where that happens, where are the areas where people are going to get stopped out, right? And then learn to have a system to handle it when it does. Either the sniper or the Rocky Balboa. This is the way. Speaking of chop, man, we've crossed through the opening price like 30 times. So this is a form of stopping people out. What are they doing? They get above the opening price and everybody's like, oh, it's going up. And they go long and then they come back down and they sweep them. They take out stops, right? So then it's going down. Everybody's like, ooh, let me get short. And then they come back up through the opening price and they sweep them again, right? So that's the same idea. It's just instead of using the overnight high or the overnight low, they're just using the opening price. But it's the same high frequency bots. The same guy that stopped out these 49 contracts also stopped out these 29 contracts. And that's just another way the high frequency bots work. Is they just find that key level where people change their mind. They're bullish above, they're bearish below, and it just keeps passing through it over and over again, which is why we get so much chop, especially first thing in the morning. Because who are the traders that need to take trades the minute the opening bell rings? Who are the traders that need to take a trade right now at this moment? They're FOMO. They're weak hands. They're the easiest to squeeze. So the market loves to chop and grind in the first hour of the day because they feel desperate to get in a trade and get squeezed. So what do stronger hand traders do? They just wait. They wait till they get to a better location, which might take hours, in which case they just do nothing for hours. You know what I mean? Like they just watch and they just wait for that better opportunity to come. People that are in the brigade get this. They've seen this over and over and over again. Dan in the house, welcome. Baby Q, thank you. Guillermo is here. Bob for short, welcome, welcome. Rich says, smash the like button. Yes, please do. Malcolm says, I've been through enough trading to recognize there is a 4,995 season that is discounted today only for free. Oh, session. Dyslexia kicked in. There you go. Ray, good morning to you. He says, we got Charles shot out of the cannon today. Well, there's nothing else happening, Ray. Might as well go on my lecture about, I'm telling you, it's just one of those topics that like triggers me when people are like, are they hunting for my stop? It's like, good God, man. Can we look at the NQ? Let's do it for you. All right. So NQ, exactly the same setup as the ES, right? We're opening with a gap up 2 days in a row, large gap. So we know the market on a swing basis is getting itself overly long, overly fast. Okay. It will need to cool off. It will need to come back and at least fill this first gap, but it doesn't have to be today. So now where are we on the NQ? We're right at that overnight high. Okay. As a matter of fact, if we look at NQ on here, we can probably see when they took out the stops the first time around. Yeah, I don't have the stops indicator on there. But yeah, so they poked up to take out those stops at the overnight high. Okay. So the next question is, do they bring in new buyers up here? Do they convince regular trading hours traders right now to go long or not? Okay. As long as they do, the market's going to keep going up, because each little push up, you're going to squeeze more sellers and you're going to bring in more FOMO buyers. But if they can't turn this into support, what are they going to do? They're going to turn around and come back down, because then they're going to squeeze everyone that's going long right now. Let me take a quick look at the ticks here. Yeah, too early to say. So to me right now, it feels like this is probably going to be a look above and fail. We're probably going to come back down, and just watch what happens. If you're trading the NQ, mark this level on your chart. We'll call it 25,815. Okay, the opening price. Watch what happens as the market pulls through that opening price right now. Okay, we got to the overnight high. We couldn't bring in those new buyers, but there are people buying, right? There are people going long. Watch what happens when we pass through that opening price. That's where their stops are. It's going to pass through there and it's going to go up, 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 and it's going to tank a little bit and then come back up. And you'll see it happen, and then you'll know that's where the stops are. Okay? Now, let's say it doesn't do that. Let's say it turns the half back into support and it holds it and it pushes back up above the current A period high. Guess what's going to happen there? Up, 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 up. Short covering, because then they're going to take out the stops of the sellers right now. So it's a tight range. Squeeze your butt cheeks real tight, but it's essentially bullish above the opening price, bearish below the current high, and whichever one of those breaks, that's where you're going to get short covering and you're going to start some momentum, at least for the next few minutes. I wouldn't call that a daily call, but at least for the few minutes. And I would describe the NQ as a little bit more bullish than the ES, because it was able to get to that overnight high, which the ES has not been able to yet. Okay, so you just see that little pop, boop. Where did that happen? So it's showing us that, one person just got taken out for 300 stops right there. Where did it happen? Right at what was the previous A period high. So now the high frequency bots know if they poke up, they're going to keep taking out big stops. And we'll just watch it happen. Boop, boop, boop. Take out the stops. We'll be looking for resistance at 95. Another cool thing, if you have access to Bookmap's icebergs and stops setting, one thing that I've noticed is a very large, like an unusually large order of stops. So what do I mean by that? Prior to this one, which is showing 345, they've been much smaller. 19 here, 49 there, 29 there, right? So we haven't really been taking out large players prior to this, sweeping the order books and taking them out. So whenever I see a big one like this, often that's the high of the day, okay? Or the low. Not necessarily the day, but of the move, the current move, okay? But when is it not? It is not if they make another attempt to poke up there and they don't take out stops. So if the market comes back up again, and let's say it went to 68.90 and there was no stops there, and it started to turn around and come back down, then it's definitely going much lower. That was the sweep. That was all they got. But if it comes back up to 90 now and it gets another set of stops, it won't be 345, but it'll probably be like 100 or 150 or something like that. If it gets another big set of stops, it's going to keep going up, because the market is going to keep going up as long as it can keep taking out those stops. It knows now that there's liquidity up there. So it's going to go up there and test it. But as soon as it gets up there and it finds there's no more liquidity, there's no more stops to take out, it's going to turn around and come back down. That's just what it does. So when I see a large order of stops right there, I know something exciting is about to happen. Either we're going to get more short covering or we're going to reverse. So same as the NQ, it's the ES. Bullish above the opening price, bearish below the A period high. Whichever one gets broken, we get short covering or FOMO buying. Short covering or liquidation. And so you say, Charles, this is a lot of talking. Just tell me, is the market going up or down today? That's all I want to know. And the answer is we don't know yet. We cannot know until we get to the overnight high or the overnight low. We got to get to one of these levels and see what happens next. And we just haven't done it yet, at least not on the ES. So we're still waiting. We're bullish to test the overnight high. We're 90% sure we're going to at least try, but we're not confident we're going to keep going once we get there, unless we get new buying once we do. So here we go. We took out stops up here the last time. Do we take out more stops? If so, it'll keep going up. If not, it'll be over and we'll start coming back through the opening price again. And that level is 89. You says, are you looking for a short at 68.90? Yes, potentially, but not yet. I want to be the sniper in this scenario. I don't want to put a limit sell in there. I could, I could say, I could say we got this liquidity up here at 95. So I want to put my stop above there. It's 5 points of risk. I'm relatively confident that we're going to come back down to this area around, 71. So risk reward, it's a fair trade. I could technically just short 90, but to me, I'd be very frustrated if I shorted 90 and then we got a bunch of stops that got taken out. And then I knew, oh, fuck, the short covering is going to continue and we're going to keep going. And then it's going to take out my stop, right? So I don't want to do that. I'd rather let them get the short covering, watch them come back down. Then if there's no support at 90, that's where I get short. You know what I'm saying? I get short once they've swept the order books and told me there's no new buying. So what just happened? 150 stops. Did I not just say that that was going to happen? So what does that tell us? The market's going to keep going up. They were able to take out stops on the first poke, so they gave it another try. As soon as they got above 89, they took out another 150 stops, so they're going to keep it going. Here comes the short covering. Here comes the squeezing of all the sellers. Boop, 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 boop. And now we're asking ourselves, do we get new buying or do we fail? And you better believe that if we fail, if we come back through the opening price now, there's a bunch of stops down there for everybody that's going long right now. Right now at this moment, the people that are going long are FOMO buyers, and they're putting their stops below 83. So I predicted before we came here, we were going to take out stops right here. I'm now predicting that's going to happen at the opening price. Can I guarantee we're going to do that? We're going to come back through the opening price? No, I cannot. And unfortunately, you'll have to join the brigade for me to tell you in real time whether we're going to do it, because I got to wait and see if we get new buying up here. But what I can tell you is I know where those stops are. Just like I knew there'd be stops up there at the overnight high, I now know there's going to be stops at that opening price. So if new buyers step in and the momentum continues, great. We don't worry about those stops. We worry about the momentum. But if there is no momentum, right? If there are no buyers up here, if the market can't turn this into support around 89, well, then they're coming back through the open. And once they do, the same thing is going to happen. Boop, 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 boop. We're going to sell off. We're going to liquidate the longs. So right now it is bullish, but the buyers have got to stay above the opening price. And honestly, they really got to stay above 89. They got to turn what was resistance over the weekend into support. And if they turn resistance into support, they can keep it going. So that's what we're watching for. Unfortunately, I have to say goodbye because this stream is done. If you are a member of the Pirate Traders Brigade, head on over to the private stream. I'll see you there in about 2 minutes. If I missed your questions, I apologize. You can go into the Discord, the Bookmap Discord, go to the Futures-Charles tab, ask your questions there, and I will go in later and I will type out my answers. Okay, I missed some people in the Discord as well because I was busy on my rant about them taking on stops and I didn't get to your questions. I will come back and answer all of those later. Okay, if you are thinking about joining the brigade, it's $20 a month. You sign up and then you get access to these live streams just like I did for you here. I do it every day for the first hour of day. And you can ask me all your questions. You'll get a daily email from me with targets for taking profits on longs. The first one today was the overnight high. Okay. So you'll get those profit targets. You'll get my outlook on the day every day. And I promise you, if you watch my live streams every single day, it only costs $20 a month. So do the math. You only have to make 2 ticks of profit to pay for it on the ES. So in an entire month, do you think I'll say one single thing that'll help you make 2 ticks of profit or maybe prevent you from losing 2 ticks in a losing trade? If so, the membership pays for itself. In addition to getting my insights live every day about what I think the market is going to do and where, you also get to be part of an awesome community. A community that actually supports each other, that actually helps each other improve and grow instead of just trying to dunk on one another and talk about how great we are. We're not like that. We're a supportive community. And so if you're interested in being part of that, you really should join the brigade. With that, I will say goodbye, farewell, au revoir. By the way, you've only got a couple days left to share your trade ideas if you want to, using the Bookmap hashtag to enter that competition. So I hope all of you have given that a try. And we will see you here next week. Thanks a lot, everyone. Okay, thanks. Bye.